What I promised everybody was on this support webinar, we're going to show how to use the band indicator to enter trades here based on just the pit open. As you'll recall, we've been showing using the big band indicator, the European session open. But as I showed today, this also works extremely well. It sets up some really big trades using this, but setting the session for the pit opens. And I'm going to show a couple of the U.S. equity markets, then I'll move to show some gold, the euro, nat gas, just a number of different ways to go. It provides some very nice trade setups. So first thing is when you open your chart, make sure that you have, and I'm using a 2 range, 12 days of data. And in the instance here of the equities, I'm using the CME US Index Futures RTH. That's the real-time entry. So basically, this provides for the entry at the pit open, and in this case, the pit open is 6:30 a.m. Pacific. Now, what I showed was at 6:30, this is what your chart's going to look like basically. If I scroll over here at 6:30, and when you get the first bar or two, that's what you're going to show. It's probably best if you take it and expand it really big and large. That way you get a good view here at the beginning. I'm not going to stay like this because it'll be too much, but just expand it out. The other thing that you can do is you want to know where this is going to be opening approximately, right? So notice this is where I had closed the session before. That's going to be the regular close. So the way to tell is click on your chart trader here and determine where the current bid or offer is, and that will tell you whether you need to scroll up or scroll down, because you're always going to pretty much get a gap opening. Okay? Always pretty much get a gap opening. But anyway, that's what it was right here. And of course, then you'll know what the OP is right off the bat as well. Okay? Because the OP will show. If I scroll all the way over here, I get my OP number. Let me go ahead and put my horizontal line in because that's what I like to use, as we showed everybody. So I put my horizontal line here at the OP. I should have had a cursor. Let me get that. $10.71. All right, that's it. So as we come back, what I showed before was this was the open right here. And based on that, you have your band, all right? Notice we had a high here at 1071.50, a low of 1070.50, and then your OP is right in the middle. As we come down through it, your short trade is right here. That occurred about 7 or 8 seconds into the session, short. Because I like to split it, I don't like to have that big of a risk, so I split it. It's about a 6-tick stop, maybe 7. Right here, if you close above this line, you're going to reverse. You're going to get out of the short, reverse to long. If not, you stay with the short. And you notice if you did that, this market continued to tank downwards. And make new session lows. Let me come all the way out here to where we're at right now. And if you were able to ride this, this came all the way down here to the 1060 level. So that's roughly about $900 a contract if you were fortunate enough to ride the runner. And of course, that's always one of the hard parts, but that's how it works. Okay. Now, in addition to that, You have important levels just like you do everything else. This was the number one important level here today. As it came down, we got a bounce, we bounced, and then eventually we traded back through it again, and it stayed that way. Notice to the upside, this will be the number one important level to the upside if we ever get there today, okay? In addition to that, then I also, it didn't show this, but you can put the HPT6DT up there. That's the dynamic trends. The nice thing about this is you can show this or not show it. I have it turned off right now, but then if you want to turn it on with respect to retrace trades, you can certainly do that. So again, as the market sold off through here, you got short. Notice we didn't even, the market was so weak, we couldn't even trade back to the mid band until right here. That was your mid band entry here, and that was your band 5 entry. And then as we moved up, this was your phantom entry. And I had commented on this in the room today. So that was your phantom entry. So you can use these in conjunction. And of course, you can show either one or none, or you can run two separate charts. The good thing, I mean, there's pluses and minuses to trading this. The two pluses are it results not in a whole bunch of trades, and the reward to risk can be just huge on these trades. And you're always going to catch the big move when it happens, okay? The negative part is, you have to basically watch it and act when you need to act. That means short through here, and once you penetrate below, you're going to be flipping to long if you close above it. But I'm going to cycle through various instruments today and to show, okay? And I'm going to show different ones. I also indicated that in addition to trading the pit open like this, if you have a major report, you can also set it for the major report. For example, at 7 a.m. or 5:30 a.m. And also for FOMC, you can set it for that one. And you can even make your own if you want. I can't recommend one way or the other, making separate times. I do know the 7 a.m. in the equities is an important number, so you can go with that if you want. And let's just, you have to create your own session template in order to do that though, right? You'd have to go here to the control panel and go to Tools, Session Manager, and you could create a new one right here with your start times and end times, and then go from there. So for example, what I'm showing over here on the CME RTH, notice, and this is Pacific time. I'm sorry, this is Central time, which converts over to Pacific time. It starts at 8:30 and ends at 3:15. So you can control your own. You can make whatever you want. You could call it the 7 a.m. or whatever. You can create your own session template over here. Okay. But again, the trade setups that are on this are very good. I want to try to find one where it moves back and forth. This is the Russell. Let's go over and look at NASDAQ from today. Again, whatever questions and comments you have on this, please go ahead and put them in. We're going to get the NASDAQ coming up here in a minute. Maybe this will be a little more active than the Russell. Because I want to show a couple of special management techniques here on stops as well. All right, so here's the NASDAQ. Let me get my OP number in first of all, so we can intelligently talk about this. So the OP today was 43.43 and a quarter. That's right here. All right, if we scroll back to the pit open, And that's right here. All right. So initially, your entry was here on the close basis. It almost took you out, but didn't. It went up. And I had also mentioned this before. The expanded chop range, which is the gray, these are important levels first coming out. You'll first notice a lot of times when these markets start their movements, they'll come up to the upper end or lower end of the chop range and then reverse for a while as the institutions are trying to determine what they want to do here. But that was your long trade here, came up to the top of the chop area and then pulled back, okay? Because we traded above here, because we closed above here, then the next, your stop is on a closed basis would be under here. You can always try to re-enter the trade if you like, but once it broke below here, then it was short, right? And once you closed below here, your stop and reverse would have been here. So a nice short trade coming down towards the bottom of the chop range again, down here, okay? Now here's what I wanted to point out. You got a long trade here. We did not get above here, so your stop is still under here. It came down, would have stopped you and reversed to short. But notice, once we came right back up again, up into here, just like any other type of trade, if you're quick enough to see this, I like to get right back on it. Get out of the short, get on the long, and then ride it up through. Okay, and then once we closed above here, your stop and reverse is not going to be until you get down here on a closed basis, which was right here. All right, and then we collapse down. And notice we're still in the first half hour of trading, still working through the first half hour. Came right down to the number one smart profile level based on this session template and bounced back up again. Now, how far up did we go on a retrace? Band 6. So you can see you can use these in conjunctions. You know you're coming back to the chop zone. Here's your OP. Coming back to band 6, your OP would have been up here by the phantom, and then we collapse back. And that was well within the window period of the 15-minute rule, so that was not a problem. All right. You pulled back lower again. Again, you can turn off the dynamic trend or turn it on or leave it running. The problem is if you leave it running, it's a little bit too busy out here, I think. So then as we continued, we had a long trade here now because we're coming from underneath. A long trade. Your stop and reverse would have been under here. We came up with a nice profit. All right. Came down. So this is a short entry here. We never cracked. So you got, if you were hanging with it, you wouldn't reverse out to long until here. So you would have taken a loss on the short, but then a very nice run to the upside. Came right back down and tested it again. So again, you could do your long entry. And that's where we're at right now. So it doesn't result in a huge amount of trades. I think in this case, maybe 4 trades over the span of a few hours, but it's a very good way to trade the range. So I'm going to stop and see if there's any questions here. If not, I'm going to move on to a couple of other markets and show some variations here. Okay, what I'm going to show is, for example, gold. I'll bring the gold contract up, and I'm going to show there's 2 ways using this other than the European session to trade gold. One would be starting at 5:30 Pacific. The other one, based on this time frame, that would be 6:30 Pacific. All right, so I'm not seeing any questions. Let me go over to the gold chart. And then I want to get some feedback. So let's switch over to gold. This will be the April contract. Well, Stephen's question is, what would cause you to get out? What would you use for your stops? You're talking about trailing stops now, right? Not stops and reverses? I think that's what you're talking about. Trailing. Well, that's always that's always the $1,000,000 question. There is no one method that always works when it comes to trail stops. I'll show an example here, and it's one of the examples that we show a lot. But let me get my OP here first. All right, so here's gold. Here's the OP. And if we use the equity open, all right, this would be your short trade here. If you weren't quick enough to reverse it when you came back in, then it did reverse to long here for a nice trade up to the chop zone. Came back down through it. And then short. All right, now this is where it takes a little bit of finesse. Okay, and a lot of you have picked this technique up. If you come down and you get, well, you technically didn't get short, but because you didn't close down here, but here you did, okay? And you come back up and flip it. If this bar fails right away, I usually will just get out and get short again and then use my stop over here, okay? There is no silver bullet to trading, but let's say you got short in here as you broke. All right, you can use your dynamic trend. And as you come down, remember you've heard me say you can use your dynamic trend as your close basis above band 1, and then you can re-enter one more time on the first reversal bar. That would be here. And then you could leave your trail stop here, or again, you could come back down and do it here. There is no holy grail though when it comes to trail stops. Yeah, well, not really, Stephen. And let's do this. Okay, I mean, let's analyze this, because Stephen's comment is it's very easy to pick your outs after you see the chart. But let's just go with this. Let's use this as how we're going to do it. And that is, if you're short, and we start to ratchet lower, okay, which we did right here, then we're going to use band 1 on a close basis as a trail stop, and we're going to get in. Once that's taken out, we're going to get back in on the first reversal bar. All right, so your trail stop is band 1. You're out here. First reversal bar, you're going to get back in. That's right here. Once that happens, your stop is going to be here. We ratcheted lower. All right, ratcheted lower. So again, using that same scenario, first close above here, you're out. First reversal bar, you're back in here, and then your stop is above here. Okay? That's consistent. There is no guesswork involved in that. There isn't any could have, should have, or would have. That's a specific rule. Now, Would you agree that that's a hard specific rule, not subject to any interpretation as stated? I just want to get your read on it to make sure that I'm communicating this properly. Okay, Stephen said yes. All right, and that's it. So there's no more reentries as we go up. You're out. That's one way to do it. The second way to do it is more conservative. Okay, you're trying to give it a little bit more room, and that is as we come down and ratchet, instead of using band 1, you can use band 2 on a closed basis. But it's the same approach. In other words, you're trailing on a closed basis. You closed here, right? I think you would have got caught here. You closed here, you re-enter here, your stop is right above here, okay? If you didn't do that, if you got out here, then first reversal bar, you're back in, and your stop is here. Either way, you're done, okay? That's a good way to approach it because it's tough to determine, well, I'm going to do X amount of ticks on pullbacks or this or that. Sometimes it works, sometimes it doesn't. At least you know what you've got here from a quantity. Now let me unshow this, as they say in the military. We will de-show it. And let's use, all right, let's use this trade as an example, okay? We came down through here. We closed above it. Now it's long. Okay, once we got above here on a close, our stop and reverse would be under here. All right, we got up to the chop zone, top of the chop zone, which is here. If I activate my dynamic trend, all right, if I activate my dynamic trend, when we got up to here, we ratcheted higher. Therefore, my stop is going to be on a close below here, which it closed, right? First reversal bar up. You can re-enter with the stop under here and you're done. You just got stopped out, but at least you rode most of it. Okay. Now that's one of the stops I like to use, and you hear me comment on it a lot. Notice we did not ratchet down here, did we? We did not ratchet, but it's the same principle. You hear me saying, because the short trade would have been on the break through here, okay, on the OP. Here's your OP. Your short trade would have been here. But you've heard me comment, well, we're coming down to the plateau, all right? That's the plateau. Because why? Because that's also a phantom area down here as well. So you can apply the same thing whether you ratchet or not. That's what I like to use. And so your combination is, are you going to use, in the case of a short, band 1 or band 2? It just depends on how much you want to give it. I don't have any other good objective way to do a trail stop where you can get consistent, non-subject results time after time. You can try to use parabolic trail stops, ATR lines, swing lines, whatever you want. Bottom line is, in my opinion, those are subject to interpretation. There is no interpretation here. Now let's create a template. All right. I don't have a 530 template. So let's create one. So I'll go to the control panel, tools, session manager. We're going to add, I don't want to add a day. I want to create a new one. And I'm going to call it the 530 open. All right. I'm going to add a start time. I don't want Sunday. I'll do Monday. And we're going to do 5:30 a.m. and we'll end Monday, and we'll do the same thing. What time shall we end? Anybody? What's a good end time? What should we use? 1400? We use 1400, 2 p.m. Oops. Okay. And I wish there was, is there a fast way to add sessions? What, the gold market? I'm just talking about gold. If it closes sooner than that, that's fine. I just want to get this, today's Tuesday, so we'll just stick with this. Although that's not going to work because we got to get a full history here. So I thought there was a fast way to get all of this. If anybody knows that, let me know. I need to change the date on this too. All right, so I have all those days in there, and I'm going to base it on the Pacific time zone. That's my time zone. So we got 5:30 across the board, not 5 a.m. We need to edit this. Are we good? No. Now I think we're good. We have Thursday in here twice. Now we're good, right? We're good. Save and OK. All right. Now hopefully this is going to work. So let's change our data series. Well, let's see where this appears at. Should be, here it is, 5:30 open. Let's see if this works. If not, I'll be back to the drawing board. How about that? Let's suppress this. All right, now notice you're going to get a different OP, right? It's slightly different. It's a slightly different OP. But pretty much the same thing. All right, so short entry, long entry. That's trading to 5:30. You can also do that for nat gas. So I'll go over and show nat gas. Nat gas is another good one that starts at 5:30. Our OP today in that gas was 1.857. Okay. So this is pretty good from the standpoint that you don't have a real big risk on this. Okay. And the initial trade was short, flipping to long, back to short, and then back to long. So you got chopped in the first 20 minutes, but then after that it took off nicely. Notice without splitting the OP, the risk here on the band is 4 ticks. So when you have something that small, you don't even have to split the OP. You could use either end, you could either side of the band if you wanted. Okay. But again, resulting in some nice trades. And this is where we're at right now. We're pretty much out of time. You can even trade the currencies the same way. Let's say that you're a 6E trader. All right, so I'm going to change over to the 6E chart. I'm going to leave it at 5:30 because that's a good currency opening time. And we actually rolled, didn't we? Hang on, I have the wrong contract. So let me put the correct contract in here. So let me see some comments on what we're talking about right now. Is this something that is useful to you, not useful to you? Is this something that you feel you can trade with? You know, add to your stable of trades? All right, so here's your 6E at the 5:30 open, right here. Now I'm just going to approximate the OP. I'm going to split it. It's going to be pretty close. All right, so initially coming out at the 5:30, you had a short entry, reversing to long. It would stop you out right here, and you jump back on here, back to long. Good trade, even if you assume your entry is here at the 35 level. I think I'm a little off here on my OP. There we go. So you can see this is a bigger range here. That's why I like splitting them. What do you mean on the writing of that program, Stephen? What did you write? I don't understand. All right, that's the 5:30 open. You know, you can also switch if you want. Let's see what the what the RTH would be, which is going to be later. So we won't use 5:30 open. We'll use the CME RTH, this one. Mm-hmm. All right, and here it is. I can pretty much tell you it's going to be there. All right, so that's based on the the currency pit open. As Dennis pointed out, the best time to trade the currencies obviously is the European session open. You get some nice linear movement there. But this approach works with any market. You just need to create your session templates. And what did you write that in, Stephen? Okay, good. All right. Okay, is this for last week or this week so far? In other words, is this for the? Oh, okay, so you one week from today. Today being Tuesday, you went from Tuesday through Tuesday, Wednesday through Tuesday, right? 7 days. Okay, so Stephen said he did this analysis on 19 instruments. The only one that wasn't positive was the ZN, is that right? Yep. So out of the 19 instruments, the only one that wasn't positive was ZN, and it was 34,000 profit for the week on all instruments. Is that correct? Yep. Okay. It's a powerful method. You just got to be diligent and stay with it. So it's just another arrow you can put in your quiver here, okay? All right, so if there's no more questions, oh, and that was only trading from 9:30 to 3:30, that's Eastern time, right? Yeah, 9:30 to 3:30. Okay. If there's no more questions, let's wrap this up then, and then we'll see everybody tomorrow.